Hi, good afternoon, everybody, and thank you so much for joining us. I'm Chuck Bell. I'm Programs Director for Consumer Reports based in our Yonkers, New York office. And I'm really pleased to be joined by some really top-rate panelists today from the New York State Department of Financial Services, Scott Ahrens, who's the Student Protection Program Administrator, Carolina Rodriguez, who is the Director of the Education Debt Consumer Assistance Program, which is called EdCap New York, based at the Community Service Society of New York, and Christopher Hicks from Student Borrower Protection Center, which is a national research and advocacy group at protectborrowers.org. So we also are joined by several borrowers who have tried to apply for public service loan forgiveness, and they've generously agreed to share their experiences with us. So we really thank them for taking the time to do that. Can we move to the next slide, please? I'm going to give a short overview of PSLF and why we've convened you here today. Alan, do you want to do the housekeeping?
Yeah, I'll just jump back. I'll take the mic back for 1 second. Thanks everyone. As Chuck said, thank you for being here. I am Alan Smith. I'm one of the organizers here at Consumer Reports, and I'm just going to take you all through a real quick housekeeping before we get into the show today. Just as it says here on your screen, we are recording this event, and so we will be passing around the recording to everyone. So don't worry if you miss an important thing, you can always go back and check the video again. You should be able to turn on closed captioning at the bottom of your screen if that's something that you are interested in. You should have to see a little CC button that you can toggle there, and then once you have it toggled, you should be able to move it around the screen to put it somewhere where you like it, so you can keep up if that's of use to you. Please do engage with us. I've seen a few people who have jumped into chat. We also have the Q&A functionality. So if you want to ask questions throughout, we will have time for questions at the end. So please do ask any questions for our panelists as we go. We would love to have any and all questions. A few ground rules. The 4 webinars that we run here at Consumer Reports. We ask that when you are chatting and asking questions, we ask that you speak from your own experience, using I instead of they, we, or you. And we ask that you refrain from personal attacks. Obviously, we're talking about debt, and that has a lot of personal and emotional ramifications for people. So we would appreciate you being sensitive to that and coming to this conversation with best intentions. The goal is not always to agree here, but it's to gain a deeper understanding of the issue at hand. And one last ground rule, audio and technical issues do tend to be inevitable in this age of Zoom, but hopefully you will agree to be supportive and as understanding as possible when those issues do arise. We'll do our best to make sure they don't happen, but sometimes they do. So finally, I will say by attending this webinar, you are agreeing to these ground rules, which means if you don't adhere to these rules, we do have permission to take you out of this session. That's not going to be an issue today, I'm sure, but just want to get that out of the way. So back to you, Chuck. Thanks very much. Chuck, you are speaking into the mute void.
Sorry. Thank you, Alan. Just want to also acknowledge our co-sponsor, New Yorkers for Responsible Lending, which is a statewide coalition of 160 organizations working for financial justice here in New York State, who work with us a lot on education debt issues. And we understand we have many borrowers who may be on the line from other states. So we're sharing our experience from New York, but we understand this is really a national issue. So many of the things we're going to be presenting also apply to you in your states. So as people may know, the Public Service Loan Forgiveness Program is a federal program enacted by Congress by large bipartisan majorities in 2007 and signed by President Bush. And it is intended not just to help borrowers, but to broadly promote public service by reducing indebtedness and the high cost of higher education. As we know, many government and nonprofit jobs require a college or advanced degree as a condition of employment. So people need their higher education to get the job. And Congress was concerned it's difficult to fill these public service jobs because many of them tend to pay lower salaries than private sector positions. Next slide. And essentially, as you may also know, the way that PSLF works is it will forgive the remaining balance on your direct federal loan when the borrower meets the following eligibility requirements, and everything must be qualifying. So you have to have a qualifying direct loan. You have to make 120 qualifying monthly payments. You have to have a qualifying repayment plan, such as an income-driven repayment plan, and you have to have a qualifying job that you work full-time at. The good news, though, is the forgiven amount when you get it is not subject to income taxes. So this is really something that will lift the burden off many public service workers if we can get the program to work as it was intended. Next slide, please. Qualifying employers for public service loan forgiveness are essentially government at any level, so federal, state, local, or tribal governments, military members, plus civilian Department of Defense employees, and employees of nonprofit organizations, 501c3 organizations, and also some other nonprofits that may be eligible, and contractors employed by a qualified employer. Next slide. And now what is interesting is that public service jobs make up a very large part of the US economy. And the Consumer Financial Protection Bureau has estimated over 25% of the labor force actually works at one of these types of jobs for government or nonprofit organizations. So 1 out of 4 workers in the US economy are public service workers. We only have something over 1 million folks who have applied for PSLF so far. So potentially there's many more that could qualify and that could benefit from this program. And so part of our policy goal is to really get the word out and encourage people to take advantage of it. Next slide, please. Now, as people may have heard, the initial people who have applied for public service loan forgiveness have experienced a very high rejection rate. So in 2018, when the first numbers were received, some 1.1 million people had applied to be certified to get PSLF and be on track to get credit when they finish their 10 years of payments. But of people who had put in applications, the 19,321 people, only 55 were granted loan forgiveness, or only about 2%. And the data we have today has just come out. We still have about an 80% rejection rate, at least for PSLF. So that means that many, many people are trying to get it and getting kicked out for technical reasons or problems with their payment history. And that is highly, highly concerning to us as borrower advocates. Next slide, please. The key link between borrowers and the loan repayment process is your student loan servicing companies, and yet there have been longstanding customer service problems with the way that these companies operate. And a lot of times your payment history may not be transmitted correctly to the servicer that handles PSLF. And this is one of the issues that we really need to correct. So many of you who have student loans are signed up with one of these companies making your payments. You may have already had your loan transferred to Fed Loan if you've applied for PSLF. We in New York State passed the Borrower Bill of Rights at the state level to increase state oversight over student loan servicing companies because of the bad record of customer service. And about 15 other states have passed similar laws. So you can reach out to banking departments or attorney generals in your state if you're having problems, or to the Consumer Financial Protection Bureau. So next slide, please. The goals that we have as a coalition and as advocates for PSLF reform are essentially that everybody should get credit for time served. So if you've been working in public service for a decade or more, we think the Department of Education should cancel your balance of your student debt. If you've made the consecutive payments, you need to get the loan forgiveness. And similarly, for people with less than 10 years, get prorated credit for each year of service that you put in, so you can be fully on track to getting your forgiveness in the 10 years. The third thing is we'd really like to see the Department of Education automate the process of verifying and awarding credit to the maximum extent possible by streamlining the program, getting rid of bureaucratic rules, and using the information the government already has and that's already collected from you. So we could really make this, we can reinvent this program, we can make it work much better. Next slide, please. So we have a unique opportunity right now because the Department of Education has opened a docket for public comment that's open through Friday, September 24th. They are reaching out to borrowers to ask you about your experience with public service loan forgiveness. They want to hear about your experience. They want to hear your recommendations, and they want to show that the public really gives a darn about this issue. We have new leadership at the Department of Education. The director of the Federal Student Aid Office is Richard Cordray, who comes over from the Consumer Financial Protection Bureau, which was a watchdog over PSLF, and they understand a lot of the things that are wrong with it. So we are very optimistic that we're going to get policy reform if we speak out to the Department of Education. So we want to really encourage you to do that. Now, with that, I want to move over to our next speaker, who is Scott Ahrens, who is the Student Protection Program Administrator from the New York State Department of Financial Services. And Scott is an example of someone who represents a state that has stepped up to protect students and is working to protect, improve customer service for students. So Scott, can I turn the floor over to you?
Yes, thank you very much, Chuck. I appreciate the opportunity to speak to everyone about this important matter. New York State really has done a lot in this area the last 6-7 years, and it culminated last year with the passage of the Student Loan Bill of Rights and the state licensing student loan servicers, thereby having an effective way to regulate them and examine them. On that slide there in front of you is our website. Has a ton of good information on there in regards to all aspects of student loan management, right from the beginning through to repayment. And we do go into quite a bit of detail into the public service loan forgiveness program. You can go to the next slide if you could. So this started back in 2014. As part of the New York State budget, the New York State Legislature passed legislation to set up a student protection unit within the Department of Financial Services. And the New York State Department of Financial Services is New York State's banking regulator. And so even back then, they saw the importance of this. Actually, what prompted it was student loan debt having more than doubled in the previous 10 years. Back then, it was about $1.2 trillion. Right now, it's running just shy of $1.7 trillion. So it is the second largest consumer debt, right behind mortgages. And as more debt was being taken out by students, it became more of a problem for folks to manage and to take care of. So Student Protection Unit was set up, and not only do we provide unbiased information to New Yorkers, but a very important part was we received complaints from New York State residents and non-residents in regards to New York State corporations, and we were able to investigate those complaints through the Frank-Dodd Act, passed after the financial crisis of 2008, which also set up the CFPB. But if you could move to the next slide, that would be great. And as I mentioned, in 2019, the New York State Legislature passed the Student Loan Borrower Bill of Rights, which really gave us the necessary tools to regulate student loan servicers and make really effective changes. You can go to the next slide. So in addition to regulating the servicers, as part of that regulation, we included that all of these areas needed to be addressed by the servicers. And so just to run through them very quickly, we do require financial aid award letters from schools in New York. That was actually a previous bill, but we've included it here. Clear, accurate information about your student loan terms, information about repayment plans and options, very important. Information about discharge, forgiveness, and cancellation options. Actually, our regulations require that an annual letter be sent to each borrower outlining what those options are and giving clear instructions on how to explore those options. Making sure that loan payments are applied to a borrower's accounts, most beneficial to the borrower and not most beneficial to the servicer or the lender. You can go to the next slide. Making sure that customer service reps are up to speed and knowledgeable, and they treat the borrowers with respect and with fairness. making sure that detailed account histories are easily accessible, especially online. This is very important. Number 8, making sure that transfers of loans are done seamlessly and accurately. That's going to be taking place. I'm sure that others are going to touch on this, but Fed Loan Servicing, which administers the Department of Education's Public Service Loan Forgiveness Program, notified them this past summer that they are no longer going to be in that business. They're not going to renew their contract. And so all those loans are going to be transferred starting this early winter, late fall. And so we are also going to be a part of a team along with the CFPB that is going to be monitoring and making sure that those transfers are done accurately. And so that's part of our law and the regulations that were built around that law. Accurate payment histories reported to credit agencies, very important. And then responses to complaints from consumers are done in a timely fashion and done in an accurate fashion. Because when a consumer has a complaint or concern about their student loan, it has to be addressed and rectified quickly and accurately. Okay, you can go to the next slide. So part of our law and the regulation allows us to license the student loan servicers, which we have done. We've completed that. I think there's maybe 1 or 2 that filed late, but we have gone through the licensing process, which allows us to take a look at the company and examine them. We started doing examinations on student loan servicers last year, and we've completed 3 thus far. And what we do is we go into a company, we ask to look at customer files, we ask to pull call records, we look at payment histories. We basically look at all aspects of how the loans are serviced. We identify areas that need work, and then we follow up with the company to make sure that those are rectified. And what also allows us, this law allowed us to do, was to actually go in with more authority to the companies once we receive complaints from consumers, and actually get to the bottom of what the problems are, and get in there and really work for the consumer and fix the problems. We recently did a review of our complaints, and Fed Loan Servicing, obviously we received quite a lot of complaints against, and more than half of the complaints that we receive against them are directly related to the Public Service Loan Forgiveness Program. And what we have been able to do since this law was passed and the regulations put into place is we have direct communication with the ombudsperson and the director of operations there, and we can really we've seen a vast change in how they respond to us, and the direct result is the consumers are benefiting. I know others are going to talk about this, but it's very important that as a borrower working towards public service loan forgiveness, that you keep accurate records yourself, especially in this time when the loans are going to be transferred, just so that you have an accurate accounting of the payments that have been made. You have an accurate accounting of your employment verification that you're working at a qualifying employer. So with that, I would leave it with this final slide, highlighting our website that has the complaint portal there. And actually, you know, that we are in New York State. We are the financial center of the country, and we do receive and investigate complaints across the country, specifically and primarily for New Yorkers, but we do look at other complaints. But whatever state you're in, I'm sure that your Attorney General's office or your state banking regulator has or is working towards enacting a student ombudsman, a process to investigate and look at complaints. And I would encourage you to reach out to them. So with that, I think the next individual up is Carolina Rodriguez. and she is with EdCap. Turn it over to her.
Thank you, Scott. And I'm going to try to be brief because I definitely want to get to some of our consumer stories. So the most important piece of information that I'm going to provide to you today is my contact information, or I should say not my direct contact information, but our program's contact information. And I know we've been focusing on what's happening in New York State, but as Scott mentioned, feel free to reach out to any of us and we'll be able to assist you and connect you with the relevant party in your state to be able to get the assistance or answers you may need. So I work at the Community Service Society of New York, which is a really old nonprofit organization. And in 2019, my agency decided that it was time to create a program dedicated to helping student loan borrowers. 1.7 trillion is a crisis. You know someone, you yourself may have this debt, obviously, if you're participating. So the impact is felt across the board. And so since then, we've been able to assist consumers one-on-one. And really, that's what it takes for us to be able to guide clients and be able to set them up, in this case, towards achieving public service loan forgiveness. I can tell you that our first priority was public service loan forgiveness as a programmatic aspect. We started literally contacting nonprofit and government agencies and offering them and their employees an in-depth PSLF presentation. And we've learned through those presentations that it doesn't matter how smart you are, it doesn't matter how long you've been in the public sector, you're still gonna face challenges. Even for those people who are my type A, they have amazing records, they're still gonna face challenges when they're trying to pursue PSLF and actually achieve it. So I just wanna, again, provide you my contact information, and I'll give you a quick case example of like how we deal with PSLF cases. So basically, you come to us and you say, I wanna pursue PSLF, or we figure out that you may be able to pursue PSLF. We literally take a look at the type of loans you have to make sure you have the right type of loan. We look at your repayment plan to make sure you have the right type of repayment plan. And we also create a tracking, payment tracking, where we look at how many payments you've made, how many of those have qualified, in case you don't already have that information. And then if we encounter any issues, we help you file a complaint with the relevant agency. In New York State, our first complaint is going to go to the Department of Financial Services. It literally goes to Scott, who you just met. And then what's going to happen, that complaint goes to the servicer and Scott is able to oversee that complaint. I can say that we have been successful at getting people not only PSLF, but TEPSLF. And on average, our clients are getting $100,000 forgiven. And more than the $100,000, they're getting their lives back, right? Like they can now plan a little bit better for retirement, to save for their kids' college education. So my takeaway today, get help if you need help. We are here to help you. Reach out. And this is definitely the time for you to try again, even if you were denied, or if you don't quite understand why you were denied. Again, this is the right administration. They're trying to do the right thing. And if there was ever a chance for you to succeed, it is right now. So again, feel free to reach out. Without further ado, I'm going to turn it over to Chuck Bell, who can introduce our borrowers.
Thank you so much, Carolina. And I just want to say our common collective goal here is to leave no public service loan borrower behind. And EdCap is this unique consumer assistance program we have here in New York that can go out and make presentations to government employers and to nonprofit organizations. And so one of the ways we can spread the word about this campaign and this advocacy is to work within our own networks of organizations and employers to make sure that our coworkers can get PSLF. And so I just appreciate anything that any of you can do on that front. And also just want to compliment Scott and the New York DFS, because before they came into this, the federal government was doing a terrible job overseeing these student loan servicing companies, and essentially borrowers were going unprotected. So fortunately, New York and 14 other states have stepped up to pass a borrower bill of rights, and more doing so in the sessions to come. So we're very encouraged for that. Okay, so now I want to turn we have three borrowers who have agreed to come on the line here with us and to share their story about seeking public service loan forgiveness. And we're going to start out with Santa Soriano Vasquez from the Community Service Society of New York, who lives in New York City. And she's been pursuing PSLF for some time. And I understand, Santa, that you have sort of a hopeful story to share with us.
Yes, I do. Thank you, Chuck. Thank you, Carolina. That's the first person I have to thank you. I also have to be thankful that my name is Santa Soriano again. I work for the Community Service Society. So I really work very close with Carolina. So I kind of have my in-house counsel when it comes to student loan. But how I got here. So, I have my student loan for over 10 years now. These are more like graduate student loan, mostly graduate student loan. I have very little student loan for undergrad. But my graduate school, obviously, I needed to pay because I didn't have money to pay for graduate school and be able to get a master in public administration. So when I started the master program, I did have a little bit of a scholarship, but obviously that was not enough. It was just very little. So when I started taking a student loan, I started researching early on the public service forgiveness programs. And I say, I may be able to use that. I've been in public service for 20 years already. And I was planning to continue to be in public service. So why not? Why not take the opportunity that the government was giving me to continue doing public service work, helping New Yorkers in New York City, and also get my master program and continue my education that way. So I continue my master program. I got my student loan to pay for tuition, also some expenses. I'm a mother of 2 kids. And, have a household with a husband, thank God, but still there's household expenses that need to be paid too. So, to Carolina, I want you to review my student loan, my public service, and see that I'm in the right track. And so she reviewed it, and we realized that they were missing that they didn't track about 16 payments that I made early on my student loan. So about a whole year and a half of worth of credit to be granted the 120 credit I needed for public service forgiveness. So once I reached that number, the 120, Carolina helped me out and this is through the ECAP program, but also I know she's my friend too, to put together a package. I had to contact my bank on a closed account to find those payments. And that was the loan process that nobody should have to go through. I shouldn't need to have to actually go to a bank that I have an account 10 years ago to track a payment that I made to the government. Those payments should have been there and should have been tracked. But I was lucky to find those statements with those payments, and we put a package together for 20 pages to tell the government, hey, I made the payments. Can you please credit those 16 payments to my account? And luckily, and thankful, with the way that we did it, they did count those 16 payments for all my loans. Well, not the parent loans, which is another story for another day, but all my loans for my graduate program and a little bit of my undergraduate. So at this point, I can say that I have 120 payments. And so, yay, I'm happy. But there's another step. Although I already sent the application in, they're asking me to send the application. I already did send the application. So I just uploaded the application again yesterday to hopefully when I see my account next, it's a 0 account and get it done. But it shouldn't be this way. The government should be more accountable, should make the process easier, and people should be able to see the track their payment more often. They should be able to credit, like you said, Chuck, every year you work for a public service, they should account for that, regardless of the type of payment that you make. And I think that's the message. I'm there with you, Belle. And anybody that needs help, please either contact DFS in New York State or the ECAP program in New York City, Carolina. And Carolina knows of other organizations that can help you in other states or other parts of the city. So with that, thank you. I appreciate the time.
Terrific. Thank you so much, Santa. Sorry that you had the problem, but exciting that you're right at the finish line. You can't do it. So
it can happen. It can happen. It's there, and they should take advantage of it. The government should make sure that as many people as possible get the forgiveness that they deserve. Thank you, Chuck.
Thank you so much. Okay, now we want to turn to Stuart Henke, who's from Rochester. He's executive director of the Rochester Education Foundation, and he actually counsels students on issues relating to financial aid, but has had his own challenges trying to apply for PSLF and sees it with some of the borrowers he works with. So Stuart, could you just take 3 or 4 minutes and give us a little snapshot of what happened in your case?
Sure. Thanks everybody for joining, and thanks for having me as a panelist. So I'm Stuart Henke. I live in Rochester, and my journey to PSLF is that I graduated law school in 2010 and promptly decided to go into public service, and have been working in the nonprofit field ever since, with this kind of shadowy notion that someday that working in public service, I could get my loans forgiven. I kind of stored that in the back of my head and didn't really think about it again until President Trump got elected, and there was a lot of rumors about getting rid of the PSLF program. So I said, I got to get in now. So I went to go and get into the program and realized that after working for many years in public service, that none of my payments counted because they all were done under the wrong kind of loans. So that was a definite setback for me. But I thought, hey, you know what? It's still going to save me a lot of money. That law school degree doesn't come cheap. So I said, I'm still going to go forward with it. So both me and my wife, who also works in public service, are part of the program, and we both have had our own issues. As Chuck mentioned, I work with students on helping to complete a lot of FAFSA forms. I'm sure that's bringing back flashbacks for a lot of you on the call as doing that FAFSA, but I'm really dedicated to working with students who are lower income to get into some good situations with college. So it's been a challenge to recommend this program to them when there's not a lot of certainty. So what's been my status or my roadblocks? My biggest one has been just the fact that I had the wrong loans and had to consolidate and get into the right program. My wife, on the other hand, because she's much more on top of things, has had more problems. So I might have a lot of other problems, but I'm really bad at certifying my payments and things like that. So some things that she ran into is that she was working at a nonprofit job, got another nonprofit job, and made a payment in the 2 weeks in between she was in between those two jobs, and that payment didn't count, even though she was going from one nonprofit job to the other. The other problem she's had recently is that 6 of her last payments through FedLoan were not going to count because she was paying the right amount, but FedLoan was reallocating the wrong amounts to her loans by 1 cent. So she was off by 1 cent on a bunch of payments, so they weren't going to count 6 of them. So that was a real pain in the butt. So the challenges for me in a bigger way kind of refer to like my personal experience. So my wife and I were both counting on this program to be a big help to us, to be able to kind of save for the future, to be able to provide for our own kids when we have them and get ready to send them to college. We want to start saving for them, but we've got a lot of problems with this program to save for ourselves. The other kind of piece is that I wish that I could recommend this program to the students I work with, to my team, my staff, to my friends who are in public service, but it's really difficult to do that when there's so many issues and so many uncertainties. It's really a challenge. I'm really heartened by some of the things that you mentioned in the reform piece. I work a lot with FAFSA. It doesn't make sense that we automatically link the FAFSA application to the IRS, and we make people fill out multiple forms. So automating the FAFSA would be amazing. Automating PSLF would be amazing too. The IRS has the info. They just need to be able to use it in a smarter, more unified way. So that's my story. We're fortunate ahead. I met with Carolina yesterday and I said, I'm going to certify my payments today. So it's been years in the making, but I'm back in the saddle. So thank you.
Okay, well, Stuart, thank you so much. And it's a great challenge to us as advocates and to the public. We want to create a program of PSLF that we can all be proud of, that you could recommend to the people that you're counseling. So let's try to make that work. Okay, our final story share is Cynthia Chaldekis. She's a senior librarian at the New York Public Library, and that's certainly a form of public service that all of us use and deeply appreciate. So Cynthia, thank you so much for joining us.
Thank you. Thank you for inviting me. I have always wanted to be a librarian, and 20 years ago, I started with New York Public Library. Around 2007 is when we read in the paper that there was this program, the Public Service Loan Forgiveness Program. I had been paying off my loans since I graduated from school continually, and I just stupidly thought that since I was in public service, these loans would automatically count for that. I wasn't sent any notification that I should pay attention to this, that I would have to actually apply, and et cetera, et cetera. But around 2011, something in the back of my head said, you might want to check on this. And I contacted my loan servicer, and can't even remember, I think it was Nelnet or something like that. And they said, well, you actually, even though you're paying your loans and that's great, those months that you've paid, those years don't apply. You actually have to apply to the program. What I didn't know, but luckily I had the right kind of loans, so I was not rejected. So I have been paying steadily ever since. The only problem was in the beginning, nothing was automated. You really didn't receive information. And when you would call, that people were very nice, but because it was a big bureaucracy, the information was sometimes spotty. So sometimes you'd get somebody who was very thorough, and, you could just write out the recipe of the things that you could do. But then if there was confusion, a few phone calls later, a few months later, then you just kind of were in the dark. Well, now, I've been paying 10 years and dutifully paying, and getting close to the end, I decided to really start paying attention and contacting FedLoan, et cetera, et cetera. And I noticed that many of my payments weren't applying, even though I had been steadily paying. And like Stuart, it turned out that some were, $1 off. There were many loans and they were rejected. So that was disheartening. Also, if you didn't pay within a certain time, which I paid every month, but for whatever reason, how it fell, sometimes it'd be off a day or two, and then that wouldn't count. So I have worked hard to try to fix that. Fortunately, just by accident, Carolina was doing a program with the library during the pandemic, and I happened to, notice the program, and unfortunately I couldn't attend at that time, but we contacted one another, and she's been very helpful in helping me to help myself. And also she has been actively involved. So, I don't know how it's going to go. I'm supposed to be done in 2024. So we'll see how that goes. I'm very happy that we're in a moratorium and we're not paying right now. So the 2 years that I lost in the beginning part is being, given to me this way. So it's this way or that, but it's very, very confusing, very disheartening. I know people that have not been able to qualify for the program because they don't have the proper loans, et cetera, et cetera. It's a bureaucracy and it's a mess. So thank you.
Yeah, thank you, Cynthia. And, as I've read borrower complaints, I've seen many echoes of your story. This is the experience that many, many people have had. So now we're going to, so thank you so much for sharing with us. We certainly hope that you get your loan forgiveness, and thank goodness you met Carolina. So let's turn now to our national expert, Chris Hicks from the Student Borrower Protection Center. Chris is the Student Loan Justice Fellow at the center. He specializes in PSLF. He's going to give us the national perspective on what are some of the specific challenges with the program and what are the ways that we can fix it. So Chris.
Hi, everyone. My name's Chris. It's very nice to meet everyone virtually. I'm a senior fellow with the Student Borrower Protection Center, which is a nonprofit organization focused on alleviating the burden of student debt for millions of Americans. I'm really excited to be here today and talk about public service loan forgiveness. What I'm going to do in the next couple slides is go over some of the nitty-gritty details of how public service loan forgiveness works, how you can make sure you're eligible. I've seen some questions pop up in the Q&A that I'm going to try and address as I go through this, but we've got Q&A after me, so just know there's going to be a time and an opportunity to ask questions. So if we could click over to the next slide. Cool. So as has been mentioned a couple times, Congress created the Public Service Loan Forgiveness Program about 14 years ago to provide relief from student debt for dedicated public service workers. The idea was really simple. If you work in the public service for 10 years and make affordable payments based on your income during that time, then any remaining student debt you have left will be forgiven. Unfortunately, as we're going to go through right now, is that promise has been pretty much denied at every turn. So while congressional intent was 10 years in public service would equal student loan forgiveness, when it got passed over to the Department of Education to stand up this program, you saw these additional criteria be put into place. There's really 4 of them, but they're pretty tricky. So as we go through this, just remember there's websites dedicated to this. Carolina's organization can help you with this. If you're in a different state and there's a student loan ombudsman, definitely reach out to them. And you can always visit protectborrowers.org and get some of this great information. We've got a page set up that's just dedicated to public service loan forgiveness and helps walk you through the process. So more than simply working the public for 10 years, you have to meet 4 specific criteria. The first is you need to have a certain type of federal student loan, and this is a direct student loan. This wasn't the most common student loan until after 2010. So if you took out a loan prior to that from the federal government, it might be what's called a FFEL loan, a Federal Family Education Loan. You could have a Perkins loan, you could have a HEAL loan, and some people take out Parent Plus loans, so they're taking out a loan on behalf of their children. If you have any one of those loans that is not a direct loan, you're going to need to first consolidate it. So if you have a FFEL loan, and we heard some of the borrowers who presented before me talk about this, if you have the wrong type of loan, any payment you make on that, currently the Department of Education does not count towards the 120 payments you're going to have to make. So the very first step you need to do is make sure you have the right kind of loan. That's a direct loan. Anything else you can consolidate and start to build credit on a direct loan. If you have an older loan and a newer loan, you want to make sure you don't consolidate them together, because that will restart any payments you've made so far. So if you have a direct loan and let's say a Perkins loan, and you've made 20 qualifying payments on that direct loan, and you decide to consolidate the Perkins loan for the purpose of public service loan forgiveness, you want to make sure it consolidates into itself and not into the direct loan, because you don't want to lose those 20 payments you've made so far. The second criteria of public service loan forgiveness is making sure you're in the correct repayment plan, which is generally for most people going to be an income-driven repayment plan. There's a couple types of income-driven repayment plans. That's going to be income-based, that's going to be pay-as-you-earn, revised pay-as-you-earn, income contingent repayment. Any of those broadly fall into this umbrella category called income-driven repayment plans. In addition to those, you can qualify for public service loan forgiveness if you're in a standard 10-year repayment plan. The reason why you would want to try and take advantage of public service loan forgiveness through an income-driven repayment plan is because if you pay off your loans in 10 years, which is what it would be in a standard 10-year repayment plan, there's not going to be anything left to forgive at the very end. So typically, most people will start building credit towards public service loan forgiveness through an income-driven repayment plan. So you want to make sure that you're in the right repayment plan. Graduated repayment plans aren't going to count unless you're going for temporary expanded public service loan forgiveness. We can talk a little bit more about that in the Q&A. Extended repayment plans, repayment plans like that are not going to count. So you want to make sure you're in an income-driven repayment plan. The next thing is you need to be in the right type of employment. Chuck covered this at the very beginning, but this is any level of government, federal, state, county, municipal, tribal territories, or any qualifying nonprofit. Typically, that's a 501c3. We estimate that that's going to be about 1 out of every 4 people working in the United States economy will meet that definition of public service. So you should just check and see if you have a qualifying employer. The other thing you need to know about that is you have to be working at least 30 hours a week while working for that employer. So if you're part-time, that doesn't mean you won't qualify. It will mean you need to work enough part-time at enough qualifying employers that you get to at least 30 hours a week. So if you're an adjunct, if you're a substitute teacher, anything like that, where you face some level of contingency, you can combine multiple employers. You'll just want to make sure you fill out all the paperwork for each employer at once and send it in a bundle. If the Department of Ed receives it in pieces, they're not going to count it as qualifying until you put it all in one bundle. And the final breakdown that we often see, or the final criteria that can be one of the tricky criteria, as we heard, is you need to make 120 qualifying payments, or 10 years worth, on time every month. So you have to meet all 4 of these criteria 120 times. It does not need to be consecutive, but you have to do this 120 times. And if you pay ahead, or if you pay late, they will say you've not made a full qualifying payment. So this can be a place where people get tripped up, because if you pay $5 or less too little, the Department of Education doesn't notify you that you paid too little. So in the example we heard before, you can be off by a penny and have no idea. I've worked with borrowers who've been 1 penny behind for about 4 years, which means they lose 4 years of qualifying payments. So you want to make sure that you're making on-time full payments, and you can do that by calling your student loan servicer to ask. While working full-time or for a public service employer, or multiple part-time public service employers, while you're in an income-driven repayment plan or a standard 10-year repayment plan, while you make payments on your direct loan. If we could click to the next slide real quick. So the easiest way to check that you're doing all of these things is by filling out what's called an ECF. That's an employment certification form. So you and your employer will fill this form out. It can seem like an overwhelming form. It's multiple pages long. You really only have to worry about the first 2 pages. So you're going to fill that out, and you're going to send that into currently the student loan company called Fiat, who operates as Fed Loan Servicing. You might have seen their logo when those were up earlier in the webinar, so that they know you're seeking public service loan forgiveness. So you're going to send that in, and what they do is check to see if you have a direct loan or not. If you do, your loan will be transferred to Fed Loan Servicing, and then they're going to check the other things, like, is your employment eligible? Are your payments eligible? And they're going to do a long check. Unfortunately, there have been a lot of problems with people finding out too late in this process that they thought they were qualified, but something was wrong before. For this reason, we advise that you submit an ECF as soon as you're interested in public service loan forgiveness, and then do it each year until you qualify for forgiveness. So after the 10-year mark. And also do that each time you change public service employers. You don't have to do this, it's optional. You can document everything after 10 years and send it in all at once when you apply for forgiveness. But if you do this way, you have a greater chance of catching any issues early and dealing with them in real time, rather than finding out a couple of years of payments don't qualify. Another important note is that, this is another example of how this program is more complicated than the concept of just working 10 years in public service, that currently you need to still be working the public service at the time that your loans are forgiven. What this means is that even if you have a full 10 years and have done everything correct, you can't retire or take an ineligible job and then apply for public service loan forgiveness. You need to apply and wait till you get the forgiveness to change jobs or leave the public service or retire. It's a very frustrating part of the program, and frankly doesn't make much sense, but it's important to know. And this is all the more frustrating because the huge backlog of public service loan forgiveness applications that cause folks to have to wait for 6 to sometimes 2 years to find out if their application's been accepted. Next slide. So Chuck mentioned this before. So 98% of people applying for public service loan forgiveness today are being rejected, typically for one of those small reasons. It's wrong loan type, wrong repayment plan. Their employer wouldn't sign their ECF form correctly, or they wrote down the wrong name. So when the Department of Ed checks it against an IRS database, they don't see it. People get rejected for all sorts of arbitrary reasons. And this has caused huge frustration. And thankfully, for the first time ever, the Department of Ed is asking people applying for public service loan forgiveness what their experience has been. If we could click to the next slide. So more than 35,000 borrowers have submitted their personal story to the Department of Ed, talking about their experience with public service loan forgiveness, where they experience breakdowns, where they've experienced hardship, where they experience frustration. And this is one of those examples from a New York borrower who works in a hospital. But the reasons why people are being rejected are most commonly wrong loan type, wrong repayment plan, or there's one question on the ECF form that employers often get wrong, which is asking if you still work there. There's a checkbox they have to do. And if they don't check that box, people's ECFs were getting rejected. So people are losing out on this benefit for very arbitrary reasons. Next slide, please. I thought we had one more. So I do just want to say very quickly, the Department of Education, again, for the first time ever, has opened up this public comment period so that individuals can actually submit their experience. And it's really important that everyone talk about the problems they've had, whether it is loan type, repayment plan, employer issues, because there are things the Department of Education can do retroactively to grant credit for people, because the congressional intent with public service loan forgiveness was to have people work 10 years in the public service. It wasn't to have to make 100% payments on time when there's like a 1 cent difference. Like, people are getting swept up for bad reasons. So we want you to share your story. And hopefully the last slide where someone submitted that to the public comment portal can help you think about how you want to share your story. But they need to hear about these narrow, arbitrary things that are just tricks and traps. It's bureaucratic red tape that are preventing people from getting a huge benefit, so that they can fix this moving forward and also deliver justice to those that have been wronged in the past. But I'm going to stop there. I know there's some Q&As, and I'm going to hand it back to Chuck.
Chris, thank you so much. You did a fantastic job. I'm sorry if we butchered one of your slides, but I think you answered so many questions in the bit that you just did. And I totally agree that Congress did not intend to leave public service workers frustrated and without loan forgiveness at the end of their 10 years of service. I want to reiterate again, though, as advocates, I think we are all very hopeful the Department of Education they know that there's a problem. They're reaching out to the public to find out the dimensions of that problem and to find out the specific problems people have been having. Already 37,000 comments have gone into this docket at the Department of Education. And the new leadership there are people that were formerly watchdogs of PSLF. So we are very hopeful that they're going to take some bold actions to grant loan forgiveness to all the folks that deserve it. But again, we want to reiterate, through next Friday, September 24th, you have the opportunity to put in a public comment. If you work for an organization, you can do an email to your coworkers. We have some model emails we can provide you with to alert people in your organizations. If you know somebody in your human resources department that wants to send this out to all the employees, we think it's really important that people get the information about how to apply for PSLF and how to get it, but also that the borrowers are heard. And so groups like the New York Department of Financial Services and the CFPB are also collecting complaints from borrowers and trying to follow up on all the things that have gotten screwed up and gotten wrong. And so both things are really important. We need checks and balances to get these programs to run correctly. But I think we all share this vision of a simplified program that's easier for borrowers to access and use, with a lot less administrative and bureaucratic hassles. So we've created a link that we'll be sending out to you to follow up from the webinar, so that you could share your story directly with the Department of Education. If we maybe had time for 1 or 2 questions. Marcus, are there any questions, or Caroline, any questions that you think we should address?
Yes, there's actually a really good question that was meant for Scott. Scott, I don't know if you want to reply to or answer that question in the chat. Let me find my way back here. And basically, let me see. Sorry.
In regards to the time frame at which.
Yes, please. If you can repeat the question and then answer it, that'd be great. Thank you.
Yeah. Somebody asked, what sort of response rate does DFS have to borrower complaints? With our licensed entities, it's 100%. They by law have to respond, not only to the borrower, but to us. With our unlicensed entities, which would be some nationally regulated banks and some other financial institutions, we actually have a very good response rate. It's pretty close to 100%. Pretty much everybody at this point is on board with the process. And then usually it takes about a month from start to finish. By law, the companies have to respond to us within 15 days of receiving the complaint. Sometimes they do ask for an extension to gather some more information. We certainly appreciate them digging deep into the issue and being thorough in their response. So we always do grant that, and we are constantly following up to make sure that the process is moving forward. So, yeah.
Thank you, Scott. I know we're going to lose Chris because he has to go to another webinar, but I did see one question here from Bianca that says, what do you suggest is the best way to correct mistakes on Fed loan summaries of the eligible payment history? I would say contact Carolina Rodriguez and get her to help walk you through how to do that. Sometimes you may have to go to a regulator or file a complaint to actually get them to do it correctly. But I'm sure Carolina would be willing to help with that. Yeah, Chris, thank you so much for joining us. We do have to wrap up at 4. So if we didn't get to your question, please reach out to one of us, to me, to Carolina, or to Chris, and we'll be happy to hook you up with other experts or people that may be able to help in your specific case. And thank you for all that you're doing. Thank you for speaking out about PSLF and for joining us here today.